Howdy, ladies and gentlemen, here's Lars Schall, and on behalf of Matterhorn Asset Management, I am now connected in London with US financial expert Dr. Pippa Malmgren. Hi, Dr. Malmgren, thank you for being with us.
Hello, thank you for having me.
A few weeks ago, you've published a book with the title Signals, the breakdown of the social contract and the rise of geopolitics. What was the motivation to write the book? What is it all about? And why should our listeners get a copy of it?
Well, my motivation was when I experienced the financial crisis back in 2007, 2008. I ended up selling my house, moving my family into rental accommodation by May of 2007, before the crisis, and I was fascinated that I couldn't seem to convince any of my friends to do the same thing in preparation. And I realized it was because, they all thought that it was a one-way bet. House prices would only go up. And I just felt the need to write a book that would explain that there are signals all the time that the world economy gives us that give clues and hints as to what will unfold. And while nobody can predict the future, we can all be better prepared. So the book is designed to that end, and it really does three things. The first part of the book says we can talk about economics in plain English. It doesn't have to be in a highly mathematical language, which is usually how economics is discussed. Number two, it's about the geopolitics that economics is now driving. So I talk quite a lot about how the social contract is breaking down domestically. That's to say, the deal between citizens and their state, because the state promises to deliver certain things in exchange for you paying taxes and agreeing to be a good citizen. Well, that is breaking down because states can't deliver on their promises, and that gives you all kinds of domestic social issues. But the international version of that is there's now a breakdown of the relationship between the U.S. and Russia, the U.S. and China, and from their perspective, Russia's perspective, China's perspective, they see the U.S. defaulting on them. And they feel that they can respond to that, not just with economic policy, but with military policy as well. And then the final part of the book is about how the answer to the world economy's problems is actually innovation. And right now, there's a view that the deflation can be fixed with inflation. That's a view that actually doesn't work for the German public, but for everybody else, they're trying to create inflation. My view is the only thing that fixes both those things is innovation. So the last part of the book is about who's building tomorrow's economy today, because we will have an economy tomorrow, and it will be different from the one today. I personally think it'll be better. But it's a kind of overview of the landscape is really what the book is.
Yeah. The ties between Russia and China are getting closer. Is this some kind of nightmare to the people you talk with at Chatham House and the Council on Foreign Relations?
Well, it is a kind of a nightmare. It's a complicated issue I'd like to explain. Part of what's happening is Russia and China say, okay, you guys in the United States and Europe and the UK and Japan, you're trying to default on your debt by creating inflation. And while it may not have been successful yet for you, you've created the conditions where inflation has returned to the world economy and other parts of the world. And therefore, this is a hostile act because it destabilizes our populations, gives us social pressures, and therefore, we're entitled to reach for assets that we think belong to us. So the Chinese, for example, become more aggressive in the South China Sea because you have 10% of the world's fish supply there. That matters in a world where protein prices are hitting record highs. You have oil and gas. For the Russians, it's similar. They say, well, in the world where you're pushing up the value of hard assets, the value of Ukraine has increased. It's the fourth largest food provider in the world. And if there's a question as to who's going to have greater influence over it, NATO and Western Europe, the EU, or Russia will say, we'd like to keep that asset in our pocket, in our corner. And so I think the economic drivers are very powerful here, but it's a very unconventional argument. The view in the industrialized world, or the Chatham House view, the Council on Foreign Relations view, is very different. Their view is Russia is small, relatively insignificant. They are broke. It's a lot of noise. We don't have to worry too much about this. And the events in Ukraine are specific, local, and isolated. This is not part of a larger grand strategy. Whereas I think it is, and we should pay attention to Russia's activities from the Arctic all the way along the border of Western Europe down to the Mediterranean and the Black Sea. It's not just about Ukraine. And yes, they think it's an important development, but not necessarily threatening. For example, Russia and China together are working to diminish the use of the U.S. dollar and to increase the use, particularly in emerging markets, of renminbi and rubles. Americans, they're not even really aware of this issue because they're so U.S.-centric. They don't really even register anybody would use anything other than a dollar. But for Russia and China, they're sort of incredulous and amazed because the U.S. spends more than it earns, and the people who have been financing the gap between spending and earning, what we call the current account deficit, have been Russia and China. So if they stop buying U.S. bonds and transacting around U.S. dollars, this will potentially have a big impact. But it's a funny thing if the U.S. side doesn't register that. So altogether, the dialogue between the U.S., Russia, and China is definitely deteriorating. Everyone feels the deterioration, but they all disagree on what are the reasons why, and therefore what are the solutions.
Well, I wanted to ask you about this later on, but I will now ask you about this. Why do you think China and Russia are buying gold in huge quantities? And why isn't that much of a bigger story in the financial mainstream press in the West?
Yes, well, I think it is a very interesting story. We come back to the quantitative easing strategy in the U.S. and the West, which is designed to create more inflation. So their view is there's a long history of the United States using inflation as a means of defaulting on its debt. I mean, that's how the Americans paid for the American Revolution. That's how the Americans paid for the Civil War. It's how they paid for Vietnam and the Great Society program. And so we have a debt problem that's at least as bad, if not worse, than those prior debt burdens, and therefore it's not surprising the U.S. leans toward inflation as the way out. And so their view in Russia and China is, then we better own hard assets. I would go further and say for the Chinese, their view is they would like to emerge as the one hard currency in a world where everyone else is debasing their currency. And therefore, buying gold will let them say, you see, we have more hard assets backing our currency than those guys in the U.S. For Russia, I think the buying of gold is not so much a core strategy like the Chinese have. It's more a general distrust of the dollar and the policy choices being made with the dollar. But both of them together take the view that the post-war international economic order, which has been a U.S. construct with the U.S. dollar at the heart of it, is no longer serving all of the members as well as it was. And therefore, maybe it's time to build a new international architecture, economic architecture, world order. And that should be based on a new currency, more gold-backed currency, not so much on the U.S. And that's philosophically a very important development in the world economy, and we should all think about whether that's viable or not viable.
We will come back to this later on. Given both your experience and your research, what do you see as the biggest risk for the global financial system?
Well, I think volatility is a very important issue. And most people, they don't know really what volatility is. So it's simply that the speed at which prices move both up and down, I think that is accelerating. And we see it in lots of different ways. For example, only weeks ago, the Swiss National Bank announced they were ending the currency peg, which they realized was potentially on an inflationary path. And the value of the Swiss franc versus the dollar moved 43% in 30 minutes on that announcement, which dwarfs any kind of price movement we ever associate even with emerging markets. So that's what volatility is a sudden big price move. We've seen in recent weeks the Greek stock market fall by 20% in 3 days. So the magnitude of price movements in the world economy is getting bigger and more violent. And I think that is very hard for the general public and businesses to manage. So to me, that's the central issue. Also, in a world where the principal view, the consensus view is that deflation, falling prices, is the most important public policy problem. And therefore, there's a willingness to take any amount of risk whatsoever to try to create inflation. So we now have a world where I think 99% of all the economists that are surveyed say deflation is the big risk and there's zero risk of inflation. I'm content to take the other side of that trade and say I actually think that when governments want to create inflation, they usually succeed. And we should look for signs of that success. And when I look around the world, I see inflation picking up very quickly, not in the industrialized world necessarily, but definitely in emerging markets. So in Russia, we're on track to hit 17% deflation in the month of March. In Argentina, inflation is running at 23%. In real life, what people are paying for things is obviously much higher than those numbers. In Belarus recently, we've seen the grocery store shelves literally stripped of everything because the inflation fear suddenly took a hold. So I think we should be alert. And even in the industrialized world, there's a strange phenomena where the official data says deflation is occurring. All the prices are falling on average. And yet, all anybody talks about is the rising cost of living. Why is it the rail fare in the UK, what used to cost you £6 now costs you 18, and that's in the course of less than 2 years. So there's an odd disconnect, but it's partly because quantitative easing and the effort to create inflation does raise asset prices. So stock markets went up, and commodity prices went up, and there were certain costs of living, like food prices, went up. And when they announced quantitative easing was coming to an end, suddenly some of those prices started to fall. So we know that there's some kind of connection, but the nature of the connection is deeply, deeply disputed. And the Federal Reserve's view is that it's not our problem. You guys should manage your own domestic situation better. It has nothing to do with us. So it's kind of a replay of the 1970s, where the Secretary of the Treasury said, it's our currency and your problem.
Currently, the euro crisis is back on the block. Will the euro survive?
So I've long held the view that the euro in its current construction is not viable, but it can survive, but it's going to look different in future. So there are different pieces of the puzzle. One piece is, I've talked about the social contract. So that's the deal between citizens and their state. The social contract in Germany absolutely prohibits the use of inflation as a means of dealing with the debt problem. And that's because of the history in Germany. But the social contract in Italy and Spain and France actually requires the use of inflation to eliminate the debt problem. So that's a pretty profound problem that lies at the heart of the euro. It's a philosophical, social, and political problem. It's not a technical economic issue. So, for example, when Mario Draghi said, we'll do whatever it takes, the Germans were very focused on the other part of the sentence where he said, within our mandate, which prohibits inflating Europe's way out of its debt problem. The rest of the Europeans ignored that part of the sentence and just heard, we'll do whatever it takes. So it works as long as he doesn't actually have to act. But the moment he has to pull the trigger and reveal his action, that's the moment he can alienate the Germans and not satisfy the rest of the Europeans, because even if he tries to create some inflation, it may be difficult. So both sides would be unhappy. So that's one issue. The second issue is the membership. And I think that it's very important that the decision was taken to make a quick entry for Latvia, and they entered on January 1st, 2015, Because now, if Greece were to drop out of the euro, then they can say, well, yes, but Latvia entered. So now we know that the membership can be fluid. And they'll argue Greece is small and it doesn't really matter, and devote all their resources to defending Spain and Italy, the really big economies. So I think we should all understand it's possible for the membership of the Eurozone to become more fluid. That's one thing. And a second thing is, within the Eurozone, I think there was a willingness to try and be, let's say, more diligent about paying the debt down, as long as the pain level wasn't too high. But now people in Spain, in Italy, and France, they've been tightening their belt for a long time, and they don't see the progress. They don't see the results. They can't see the end of the pain. And therefore, their willingness to undertake reform, I think, is diminishing every day. And so at the end of all this is a simple question: is it really serving the interests of all the members? And I think within Germany, the public is increasingly saying, no, it's not. And that is reflected in the rise of the AfD party support, which is really quite high. And the far right across Europe, which is very anti-Euro, and it's the public saying, is this really serving our interests, or is it too costly an approach? And so it may be out of the hands of the officials and the monetary policy folks, and the general public is making their position more clear, and so that's a threat to the euro as well.
You know that there is an initiative in Germany to repatriate the German gold, hold abroad. Now, would it be wise of Germany to have, in the case of an end of the euro, all of its gold reserves stored on German soil?
So, yes, this is an important story, and I do think, I have said several years ago that I've thought that Germany would make preparations in case the euro were to fail. And at the time, I got a lot of publicity because it was assumed that I meant that Germany had chosen to leave the euro, which was not my argument. My argument was they had chosen to be prepared if the worst-case scenario unfolded. And I still think that that's right, and I also think it's wise. I mean, given the stresses, it would be very reckless and foolish not to have some kind of a backup plan. So now, will gold serve as a good quality backup plan? I don't think so, because we're not in a world where people can transact in gold. But if worst came to worst and there was a genuine implosion of the value of money within the Eurozone, would Germany be quickly able to introduce something new to protect the savings of the citizens? My guess is Germany would be quicker and better at doing it than anybody else. So we can take some comfort in that. But, that's a very catastrophic scenario, which I don't necessarily envisage, but I would be surprised if Germany had no backup plan.
Yeah, but the Bundesbank says that it wants to keep 50% of its gold in New York and in London in order to be able to react to a currency crisis. Now, does it have to have the gold in London and in New York in order to have this ability?
Actually, no, it doesn't have to. And these days, swap arrangements between central banks occur really with a phone call and not with collateral. Or the collateral that's pledged doesn't have to be physically present. So, I'm not sure I understand why it matters so much. On the other hand, just because you have the gold on your territory doesn't mean you have financial security either. And let's face it, the reason that Germany kept some of its gold in Paris and London and New York was because during the Cold War, there was a fear that the Russians and the Soviet Union at that time might, invade, might, be a physical threat. And so they wanted to keep some of it out of their reach. Well, today, how interesting, we see more stress and tension with Russia. We have, air incursions by the Russians into NATO airspace very regularly these days. So does it make sense to bring it all back now? Well, that's an open question.
Yeah, but Russia and Germany are trade partners. And for example, Germany depends highly on Russian gas. And one of the questions that I have in my mind for years now is, could gold become a currency for international trade, especially in commodities, hard asset for hard asset?
Well, I do think that both Russia and China, in their efforts to create a new currency bloc, they are definitely trying to have rubles, renminbi backed by gold. So gold doesn't stand alone as a tradable commodity, but it stands as collateral behind this new concept. But I don't know. The question is, how much confidence do investors have in that? And right now, because of the collapse of the ruble, there's a kind of lack of confidence in that notion that somehow rubles are a store of value. So they may have that plan, but it won't necessarily work.
Yeah, but you've mentioned this already earlier. I want to now ask you specifically about this. Do you think gold has a future in a new international currency system?
I think gold is always part of the mix, but I have a hard time imagining we go back to a world where gold is a currency standard. Mm-hmm. I think the modern version of gold is Bitcoin, and people are definitely trying to find ways to escape and exit from sovereign fiat currencies and own something else that's independent of a government that can make the decision to inflate. But the problem for me with Bitcoin is that, you may think that you're safe with your password, but in a world where governments are very actively listening and gathering, everything from our conversations, from our emails, I just wonder how secure that really is. But it's kind of a modern manifestation of the old-fashioned desire to hold gold, if that makes sense.
Yeah. But in international relations, currency relations, I think the aim to have gold is a different one.
I'm sorry, so in international relations, they aim to...
I think the purpose of gold in international relations is a little bit different than to hold bitcoins.
Yes, no, I absolutely. But I'm just saying the public are leaning towards Bitcoin as a modern version of holding old-fashioned gold. Mm-hmm. At the end of the day, gold is very hard to deal with. It's very heavy. It's difficult to manage. So it has its limits, which is why I see investors, particularly big institutional investors, disinclined to buy gold, and instead they go for hard assets like property. So, for example, German property prices have gone up very substantially because people view that as better than gold.
Yeah. Well, gold hasn't reflected quantitative easing, we could say, correct?
Absolutely.
Yeah, and so as you know, for years and many years now, there is the question if the gold price is managed by central banks, government entities and bullion banks in the West. And for example, the Exchange Stabilization Fund of the United States Treasury Department clearly has the mandate to intervene in the gold market. So what is your opinion on this question?
Well, I think there are almost an unlimited number of conspiracy theories about this, mm-hmm. and I don't have a view as to whether any of them have any substance behind them, but the fact that people believe that the market is rigged in some way makes them reluctant to engage and to buy gold. But there are times when there's no doubt the market does take the view that inflation is becoming more of a risk, and you do see the gold price go up a little bit. But it hasn't proved to be a useful store of value in the environment we've had in recent years.
Mm-hmm. You used the term conspiracy theory. There's one question I would like to ask you, because usually it is said that conspiracy theories are entertained by, let's say, poor people who have no power and so on. But isn't it the case that the financial industry is more or less, or the financial sphere is more or less the area where the most conspiracy theories are entertained?
Well, I don't know. I haven't compared the conspiracy theories to do with, aliens in outer space with financial markets. I mean, there are conspiracy theories everywhere. I just would say that the bottom line is that I think people do have an inherent faith and trust that the financial system can permit you to exercise your transactions. They may not be confident that it will permit you to do so in an unbiased way. And so most of the conspiracy theories around are based on the assumption that the playing field is tilted in some way to benefit some of the participants more than the others. And to be honest, with the financial crisis, we have seen that the reaction of governments has been to tilt the playing field in favor of the financial institutions and potentially against the interests of the general public and the savers. And on that, that's no conspiracy. That's very clear. We saw the financial markets basically gambling with, the capital, making a bad decision. It went wrong. And in response to that, what governments did is said, here, have an unlimited check for free money. And that has meant that the public is increasingly concerned about, well, who's going to end up paying for these losses? And the answer is the general public will pay through higher taxes, reduced pension benefits, reduced benefits in their society. And I think that's a disturbing notion to most people.
Yeah. But coming back to the conspiracy theories, quote unquote, that the gold market is rigged, can you at least imagine the motivation to do a price management? For example, is it easier to keep or to set interest rates very low and to keep them very low when the gold price is calm?
Well, I would say this. The bottom line is that the officials who are in power today, I think, are genuinely doing their best to make the decisions that they think are right and will work. But there is also, one also has to understand, governments are inclined, particularly outside of Germany, to use inflation as the method of dealing with a debt problem because it's the most politically acceptable way. Because what are the other options? The other options are to just announce you're never going to pay them back. That's called an Argentine-style default. It's unlikely the U.S., the United Kingdom, Japan would engage in that kind of a approach. Or you could do what Greece has done. You can say, we'll pay you back, but later and less. We call that a haircut. Again, that's not the way the U.S. or Britain behave. You can say to your own citizens, we are going to default as the government on the promises we've made to you, the citizens. So you're going to have to pay higher taxes and get less services and benefits from your government. We call that austerity. We are getting austerity, particularly in the Eurozone and in Britain, less so in the United States. But the last option is the easy option, and that is to, create the conditions for inflation to erode the value of the debt. So are they inclined to go for the easy option? Definitely. Has there been a meeting where everybody sits around and says, let's inflate? Definitely not. It happens because you back into the easiest option. It's not a deliberate choice. It's just all the other options are much worse.
Yeah. But is central bank intervention a big issue of our time, for example, in the form of financial repression? And by financial repression, I mean what Kevin Walsh has said about it, the former member of the Board of Governors of the Federal Reserve in Washington, D.C. And he said that policymakers attempting to pursue final repression, suppressing market prices they don't like.
Well, I agree with Kevin, and we used to work together in the White House. I absolutely agree. I would put it a little bit differently. I would say two things. One is we have to understand how losses get passed on. So, for example, when governments say to pension funds, you should only hold safe assets because, you represent the savings of the general public. But the definition of safe is only our government bonds. So then all the pension funds have to buy the treasuries or the gilts in the UK. And if those actually are going to deteriorate in value, because after all, if you're at record low interest rates and you're trying to create inflation, at some point, if it works, the bonds are going to be worth a lot less, in which case, who has to take the loss? That would be the pensioners. So that's a kind of form of financial repression that has the objective of moving the loss from the government's balance sheet to your personal balance sheet. So that's one act. And we need to be careful about the ways in which governments try to move the losses onto the shoulders of the average citizen. But the second thing is governments are definitely more interventionist now. And there is a sense that the Federal Reserve and other central banks genuinely believe that they can choose the level of the market, turn the temperature dial, decide what is the right level of interest rates or the right level of the stock market. So if the stock market starts to fall, they put the word out that they could do another round of quantitative easing to push the market back up again. And this approach, I think, is quite dangerous. I mean, we know from history that things don't work well when governments try to control prices. And I today hear both Russian and Chinese policymakers say to me, hey, who's more communist now? Who has more state intervention, us or you guys? With the Federal Reserve buying 3/4 of the issued U.S. Treasuries, who has a bigger state involvement in the creation of prices? This is no longer a world where there's price discovery by the market. Governments imposing prices on the market. And I think that is a dangerous thing, and we should try and move away from that as quickly as we can. And in my book, I talked about that, and I quote Ludwig Erhard, who was the finance minister in Germany that presided over the decision to stop controlling prices and allow the market to restore prices in a price discovery mechanism. And it must have been a very scary thing at the time, but they did it and it worked. So I am confident that when we make the decision to move away from government-controlled prices back to market-controlled prices, that it will be a good thing.
Yeah. I have a big question at the end of our interview. What do you foresee as the endgame of the financial crisis?
Well, number of things. I think we are definitely seeing that the pressure of the debt is bearing down on the social fabric in different parts of the world in different ways. And that will lead to a renegotiation of the social contract between citizens and their state. We've seen it in the Arab Spring, where the public said, wait a minute, why is all the wealth in my society being distributed to someone else, not to me? And, for example, in Tunisia, that led to the ousting of a dictator who was, basically taking most of the money in the society. They've renegotiated the social contract. Now there's a better, more even, more fair distribution of the wealth in that society. And within 1 year of the Arab Spring, Tunisia launched 12 IPOs, initial public offerings. In other words, they had a record number of new businesses and investable assets within 1 year of the Arab Spring. So when I say the social contract is being renegotiated, it's not always a bad thing. It can be a very good thing. Similarly, in Germany, I think the rise of the AfD party and the rise of the far right in different parts of Europe, from Spain to France and to Greece as well, this is a call for the social contract to be renegotiated. And while I'm not particularly in favor of the move to the far right, I do think it's a kind of example of citizens voicing their concerns, and that in the end it will be a healthy exercise, but the point is to balance the interests of the society rather than to move violently in the direction of one narrow group of interests. So that's one thing. Second thing is, how does the debt get dealt with? I think in the end, it's so large, it can't be paid off. The debt in the Eurozone is simply too large, and the human cost of paying it down would be too great. And therefore, we will come up with creative mechanisms for default, just as we have seen in Greece, where they have basically said, we'll pay you back, but later and less. And the public has actually adjusted to that. 90% of all the Greek debt has been renegotiated this way. There's only 10% left. Now, can that be done with all of the Eurozone members? Probably not. But can creative solutions be found? Probably so. But in the end, the issue for Europe is going to be, if inflation is, in the end, the only real option, then Germany is going to have to really think hard about its participation in the Eurozone. For the U.S., we don't have this constraint. The U.S. can choose inflation anytime at once and has made that choice and is heading down that road. The question is, will the central bank be able to control the amount? And again, this is an issue I address in the book. Paul Volcker says, and Paul Volcker was the head of the U.S. Central Bank the last time we had inflation in the 1970s. Mm-hmm. He says you can't control the amount. Once you start to print money and try to create it, it's out of your control. Janet Yellen and the current leadership in American policy circles say we can create just the right amount and then we can stop it when we feel like it. So this is yet untested. We have to see whether that proves to be true. So that's an endgame for how the markets deal with the debt problem.
Yeah. First of all, thank you very much for this interview.
Thank you.
And secondly, I get a copy of your book, and in a few weeks we will talk about this book then specifically.
That would be great. I look forward to that.
Okay, thank you very much.
Thank you.